Well, happy December 1. My name's Jessica Ramir, a market strategist here with Moomoo. It's great to have your company. Well, share markets bidding farewell to pump and dump November. That left the ASX 200 down 3% for the month, with CBA shedding 11.2%. As for the US markets, well, the pin-up NASDAQ 100 lost about 2%, with Nvidia, the chip darling, the biggest laggard, down about 13%. Now, these moves, you could argue, were driven by yo-yo expectations of a Fed rate cut, and down under we had hotter than expected inflation data. But this week we could see Black Friday and Cyber Monday spending lift broad sentiment, especially in those consumer discretionary stocks. So you might want to keep your eyes on those. While we also have Australian economic data or GDP on tap, and this could provide additional support. So there's plenty to consider. But let's just shift to where some of the hottest returns are right now in markets, and they're in commodities, my favorite part of the market. We have seen silver hit a brand new record all-time high on Friday. It's now up almost 100% this year. So this has got many thinking. Commodities such as silver could gain the nod to pierce new blue sky territory. And this narrative comes from the fact that markets could stabilize this week in Australia and the US, but also we've got traders about to digest two key US inflation prints. These are going to be the key data releases before the Fed meets next week. And the key is if the data sets basically show the Fed can cut interest rates, we should see commodities seriously ignite. And these factors are supportive of a rally in December, in particular for commodities. But we also have to think about December. It is traditionally, historically, one of the most bullish months for equities in Australia and the US. And why is that? Well, it's because sentiment improves and trading activity is thinner. It is also the second best month of the year for gold and silver. Looking at the history books, that is. If you have a look at the returns that we've seen over the past 10 years, silver has rallied about 3%. It's rallied 2.7% on average in the month of December, while gold has gained 2.2% in the month of December. The other reason that we need to consider is why we traditionally see a boost in December is because this is a time when institutions are rotating back into stocks with strong forward earnings estimates. They're basically institutional investors are looking to kind of boast to their clients that they are positioning portfolios, getting ready for growth for the year ahead, as in 2026. Adding fuel to the thinking that we could see commodities ignite higher, you've got to also consider that we could have a potential broad market floor forming under markets. We also have fear falling as well. And we can see this evidenced by the VIX, the market's volatility index, which you can, of course, track on Moomoo just by typing in VIX. That has dropped to a level of 16. And around this level, we typically see lots of buying activity across markets. So again, just harping back on my message, you have to ask, commodities basically seem front and center, really jumping up and down right in the center of the stage, saying, hey, we are probably going to garner a lot of upside ahead. So the other factors supporting more upside for commodities ahead is that we do have a softer US dollar. And all eyes are on the US dollar this week on the back of what I was just saying earlier. We do have those key data sets out in the US. But the fact is that we do have the US dollar index trading around 3-year lows. And the other powerful force with commodities, of course, we've got supply demand tightness. And this dynamic duo basically provides two key major drivers for commodities to do well in December, but also in 2026. Just recapping some of the moves that we saw in commodities on Friday, we saw silver jump almost 6%. It rallied 5.8%, and it's now up this year 95%. Those gains likely to extend across 2026. Copper, king of the green energy transition, it also did really well on Friday. climbing up 2.2%, extending its year-to-date gain to almost 30%. With all these factors to think about, we really need to pause and reflect that there are many commodity stocks to watch, not only in December, but in 2026. We're just going to cover some commodity investments to add to your investment watch list today. Let's kick off with Pan American Silver. This stock is up 24%. That's how much it gained last week. And it's a US listed Canadian miner that operates across Latin America. And it's now at all-time highs, and their shares have gained about 121% so far this year. The average investment analyst on Wall Street says, hey, it's a strong buy, so you should be keeping your eye on this stock. It also continues to benefit from the rise of silver. And of course, the demand for silver, as we're saying, is basically underscored by industrial demand. And also, central banks are buying silver as well. Another investment to add to your watch list, the Global X Copper Miners ETF. It's doing really well of late, up about 10.1% in the past week, following the Solactive Global Copper Miners Total Return Index. Now, the ETF itself that tracks that index is mostly exposed to miners that are operating across North America, China, and Australia. And the ETF has done really well, as we're saying. It's charged up 90% from its April lows. And of course, it's continuing to benefit from the strong demand for copper. Copper also, as we've been saying, king of the green metals. It's got very strong long-term demand dynamics supporting upside for copper. It's also outperformed its peers, the ETF, in its entirety over the past 10 years, and that's as at September this year. Last but not least, changing pace to a different stock that is not in commodities, and that is Metcash. And this is the owner of IGA plus liquor stores and hardware chains down under in Australia. And they reported results this morning. Statutory profit up just ever so slightly, 0.3%. But perhaps the takeaway is that food businesses remain resilient, of course. Everyone needs to eat. But what is not so strong is that we are seeing earnings fall in liquor. Aussies not so keen on buying alcohol this summer, I'm not sure. But alcohol sales are down, really interesting to see. And so too are tinkering goods. Hardware sales also down as well. And perhaps this is a theme that we've expressed that we are seeing across US retailers as well. But if you think about Metcash, back to the stock itself, it's rated as a buy among the average analysts, and earnings are expected to dip. So it could be a bumpy half year ahead for Metcash. Plenty to watch and consider. I'd say keep your eyes on commodities, especially silver.